Friday, March 20th, 2020, Monaco 64, home of alternative economics and contrarian views, with the British pound dropping below key support recently at 120 and trading down all the way to 114. I want to talk about why currency debasement is the debt tax and will continue to drag Britain and its economy lower in the coming years. And this is also for all the other countries in the world. I'm doing about Britain and the pound, of course, because I am in the UK. For my UK viewers, I will probably do something similar for other countries in the near future, but you can bet that it's happening in your country as well. So yesterday, I was driving over to my mother-in-law's house. She's almost 88, so she's quite elderly, and she needed milk and toilet rolls, so I drove over there to drop some off for her. I was listening to the radio in the car, and there was an advert from NatWest Bank. Don't forget, NatWest is part of RBS. RBS was the bank, probably one of the biggest banks in the world during the '08 crisis, and it collapsed. We, the taxpayer, had to take over it. The government or the taxpayer still owns, I think, 2/3 of the stock of that bank. So it's a government-run bank. It's been like a burden on the taxpayer for many years. And their advert said that they're going to schools now to teach children about money. And I thought, my goodness, the government now is teaching children about money. The government that's basically destroying the currency or the money that these children will have to use when they grow up. And it's destroying, of course, their parents' currency. It's making them poorer. So are they going to ask me to go into the schools and teach them about what is really happening? I wouldn't hold my breath or your breath. I don't think they will do that. So I want to go through the course of the British pound, especially since 2007-08, and how I've said in all my videos in the last 4 or 5 years that the debasement of the pound, debasement, I mean the pound dropping versus the dollar, is how they make the debt more palatable. Who's the biggest debtor? Well, it's the government. They've got control of the currency. So they can issue it, print it with the Bank of England, together with the Bank of England, abundantly. And they use crises as an excuse to keep inflating the system. They fool us into thinking that we have low inflation, of course, with their statistics. We all know, the general public, that everything has been going up in price. We've had shrinkflation as well. All the things that we need, the basic necessities of life, keep going up in price. And why is that happening? Well, it's not prices going up, really. It's the value of our currency going down. And we have to use our currency for everything that we purchase. So if that currency is going down in value, of course, inflation is going to go up, or prices. Because inflation really, technically, is the inflation of the currency that leads to its debasement. So we've had massive inflation since 2008, inflation of the currency that leads to its debasement. It's the simple law of supply and demand. Of course, we're told, even by mainstream economists who work for the banks and politicians, that we haven't had inflation. Well, that's because they want to keep this game going. They want to extract wealth from you, tricking you into keeping this currency and accepting this currency as a form of payment. And that's one of the reasons why I make these videos, to try to help people understanding that. Of course, I don't reach millions of people, but if I can help a dozen or 20 or 100, I think I've done a fairly good job. They could probably help others, so we get a little bit of a network effect. So let's look at some charts. I like looking at charts because it gives you a visual idea of what's happening. A lot of times you listen to the radio as well, and they're reporting on business or the markets, and they always say, oh, the pound dropped so and so against the dollar. It's at 120. The FTSE went up 30 points. But so you never have a bigger, longer term idea of what the pound or the FTSE has been doing. They never say, oh, in the last 20 years, the FTSE is actually down. But no, they say it from yesterday. So that's why I think the charts are important. So the first chart I have here, it says the gradual destruction of the British pound. So I've got it back to 1985. Why did I go so far back? Well, because we're getting very close to the all-time low versus the dollar here. You can see there, February 1985, 103.45. And then we've got the '08 crisis there. And I've got a few statements here in this chart. First one says, since the 2008 crisis, currency debasement is the covert policy of the government and monetary authorities. Why covert policy? Well, because they can't tell the public we're doing this on purpose so we can write off our debts, the government's debts, and basically screw the savers, screw the general public who have to use that currency. So even though we can see the currency going down, most people don't put two and two together and realize that this is a covert policy and it's on purpose. Second statement, Brexit, and you can see there, I'm not going to say it, are just covers or distractions in order to take the spotlight away from real culprits. Who are the real culprits? Well, they're the establishment, the central banking, City of London, and Westminster gang. They're the ones who work together. We're told that the Bank of England and the government they don't work together. The Bank of England is independent, but you can bet they're working together right now because there's a crisis. So the third statement, currency debasement or inflation is the best way for governments to write off massive debts. It's a transfer of wealth away from savers of the currency to those who owe in said currency. Second chart here is the chart of one fine troy ounce of gold in British pounds. Why do I say troy ounce? Well, because the normal ounce is 28 grams. The troy ounce is 31.1 grams. So you need to make sure you got the right ounce when talking about gold. And as you can see, it's been very choppy, and that's why a lot of people are scared of investing or saving in gold, because they see these sharp movements up and down. But over the long term, as you can see, it's only gone one way, higher. So that means that the pound is also dropping versus gold, not just the dollar. Of course, there was an article in the Daily Express here in the UK discouraging people from buying gold, pushing people, of course, to buy stocks, the FTSE, saying that gold is a risky commodity, but gold is a currency. I know it doesn't circulate, but legally, it's still legal tender in the UK. It has a face value of £1. Of course, it costs over £300 to get one right now. And I've been in this game a long time. You can see here, I wish I could still buy an ounce of gold for £255, like I did back in 2005, as you can see here by this receipt. So I think in 10, 15 years time, you can add yet another one to that price, because right now we are above 1250 in gold. We might be at 11,000 in 10, 15 years time. The third slide, I made like a presentation. This is from a slide presentation. Asks the question, US dollar or gold? So I've done a little exercise here. I used £1 million just as an example. I know most of us don't have that kind of money, but it gives you a good idea of what the dollar and gold have done versus the pound, and which one has performed better since the crisis of 08. I used November 07 because we were in the crisis by then. This will probably give you an idea of where I think you should keep most of your savings. And it's not a matter of preference, it's a matter of numbers. So let's do the little exercise here. British pound high, November 2007, $2.1150. So that was the high for the pound back in 07. So if you sold £1 million $4, you'd get $2,115,000. As of yesterday, I took the prices from yesterday. The prices might have changed a little bit overnight. British pound, March 19th, 2020, $1.15. So if you sold your dollars back for pounds, if you closed the trade after 13 years, roughly 13 years, you'd get £1,839,130, 83.91% return. You probably would have gotten some interest, of course, if you kept the dollars in the bank, even though the interest has been minuscule since then. It's been kind of zero. So let's say it's 83.91%. It might be more, a little more, but not that much. And then we do the gold comparison. So we get 1 troy ounce of gold in British pounds, end of November 2007. I got the data here from the LBMA website. 380 pounds. That's how much you needed to buy 1 troy ounce in November of 07. So let's say you sold £1 million for 2,631.57 troy ounces of gold, because that's how many ounces of gold, troy ounces of gold, you would have gotten at that price of 380. So yesterday, if you closed the trade down March 19th, 2020, the troy ounce of gold was around 1280 when I did this, prepared for this presentation. So if you took those ounces of gold that you've kept safely over those 13 years and you sold them for pounds, you'd get 3,368,421 pounds. So that's a 236.84% return versus 83.91% return. So yes, the dollar has been a good protection versus the debasement of the British pound, but I would say gold has been even better. I mean, that's proof right there. What about the FTSE? How is the FTSE done? Well, I haven't even done the calculations, but you can see here by this chart that it hasn't really gone anywhere. If anything, it's lower than it was even 20 years ago. So the FTSE has not been a good store of value, even though we're told by the Daily Express to stick to financial advisors, how can I say, advice to stay in the stock market, to, that the stock market is going to pick up again, that you have to buy the dip, right? So the numbers don't lie. I've been talking about this, as I said earlier, for over 4 or 5 years. There are a couple of videos here that you can go through. One was from August 2016. I was already talking about how the British pound, the direction of the British pound was lower. The video says bear pennant pointing to further weakness in British pound. I think we were around 140 there. I'm not sure. You can listen to the video. I did one in 2018. It's entitled The End of Britain and the Devastation of Sterling. So this is not like I'm coming here now and telling you the first time. I've been warning my viewers. The end of sterling, by the way, there's a link in the description of my video to another video by Money Week magazine. The video was made in 2013 by Money Week, and they explain exactly what's happening, why the debt is the problem, and what will happen in the future. And even though it's 7 years old, I think they've been right. They've been proven right. We would see a financial collapse, and that's what we're seeing now. Of course, they're going to throw everything at it. I've just seen this morning, aside from the Bank of England yesterday, they've announced more debt for you. They're going to issue another 200 billion in QE. This morning it says Sunak to launch a vast rescue package for UK companies. So not only the Bank of England, but the government. And this is on top of the 350 billion he announced the other day. Sunak, of course, is the Chancellor of the Exchequer. So you can bet that what Money Week talks in their video in 2013, the problem with that is going to get even worse. And that's why I think very soon we will test that 1985 low of $1.0345 for the pound. Could we go to parity? Definitely we could go under a dollar, break the buck, so to speak. Anything's possible. Is it going to happen right away in a straight line? No. I think we could even still go back up in the pound, and we are doing it today. I'm going to check the markets in a minute, and the pound is stronger, and we could even go back above 120, which is now a key resistance. But the longer term direction is lower. What about tax-wise? Well, you wouldn't have been taxed in the dollars you kept in the bank because it's a currency, it's money. You got money in the bank, it's not earning interest, it's not taxed. Same thing goes for sovereigns or gold. Coins of the realm in the UK, they are legal tender. There's no tax on them either. So let's look at the markets. It's 8:05 a.m. London. So gold right now is actually up $42, almost 3% at 1512. So we're back above 1500. Spot silver is up 82 cents, almost 7%. So is silver finally making its move here? Who knows? It's been very frustrating. I got my silver, by the way, that I bought a few days ago from Gold Investments. They sent it through Federal Express because I think the Royal Mail or the Post can't guarantee the delivery presently. So I've got it in my hand now, that silver. That day I just thought it was really a good time to buy if I could find any. So the stock market is higher as well here. The Dow future is up 3.3% or 660 points, 20,750. S&P is up 3%, 2484. The NASDAQ 100 future is up almost 5%. So it looks like things are picking back up here a little bit. The pound, of course, has rallied. Yesterday when I was preparing for this video, it was at 115. Right now, believe it or not, is at 118.25. I think the volatility and the sharp moves are just a sign of the longer term weakness of this currency, because you'd think a stable currency wouldn't move 3% a day like it is today. So yes, it's going up. It doesn't mean it's going to go up forever. This is just a dead cat bounce. So yeah, we're up 3%. Let's have a look at where the price of gold is in British pounds. Well, we're actually a little higher than when I did my little presentation yesterday. I think it was at 1280. Now it's at 1282. So even with the huge move up in the pound versus the dollar, gold is outperformed. The euro is up 1%, 107.98, and the dollar is down 1% against the yen. Dollar is down 1% against the Chinese currency. Yes, we've seen the dollar strengthen quite a bit of late. But as you've seen through my presentation, yes, the dollar does well against other fiat currencies, but there's a currency or kind of money that does even better. And you should know by now what it is. Starts with a G, G-O-L-D. Oil has rebounded quite a bit. It looks like today people are more optimistic about all the stimulus that the governments and central banks are going to provide. I personally think it's not really going to work. All it's going to do is lumber the public with more and more debt and more debasement of their currencies. I think the crisis we're going through now is going to change. I might be wrong, but I think it's going to change the people's psychology as it pertains to consumption. I think being in a lockdown at home with the family, not going out and watching football or going to the basketball game or watching the Masters or doing this and that, people are going to realize that it's not a bad thing to stay at home and that you don't have to participate that much in bread and circus. And I'm not saying that I don't want to watch the Masters, hopefully next year again, but I'm just saying people are going to change their priorities, and that could actually backfire on the politicians and the bankers, because people, what that will mean is that will mean less borrowing, less consumption, less traveling. So that's why I don't think it's going to work in the longer term. So let's finish off and quickly look at the bond market. The 10-year yield this morning, surprisingly, is down 11 basis points. And that doesn't equate with this massive move higher in the stock market. Well, it's not that massive, 3%. So it's at just above 1%. So the bond market is still telling us that all is not well out there. If you thought the debt that has been incurred since 2008 was big, yeah, the debt they're going to incur now because of the current crisis is going to be even bigger, and you need to protect yourself, because all that means is that the pound in your pocket is going to be worth a lot less. Currency debasement is their policy. Yes, they don't tell you, and it will be reflected in the lower exchange rate versus the dollar, and it will be reflected in a higher exchange rate versus gold. You're going to need more and more pounds to purchase an ounce of gold. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. If you haven't subscribed to the channel yet, think about subscribing. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.